Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 14th. Today we got a bit of economic news today, and we'll start off with the retail or NFIB Small Business Index for the month of December. So this is a confidence level that gauges this is the index that gauges the confidence level of the small businesses out there. So we had a 92.5 rating back in November, and for the month of December, it went up to 93.9. So small businesses are continuing to gain more confidence in where the economy is at, where they're seeing their numbers, and obviously because they are the larger employers out there, when you factor the amount of small businesses out there, this is a good indicator of where the confidence level is on the economy. We also had the retail sales for the month of December, and we had a 0.4% growth in the month of November. The projection was supposed to come down in actual contraction in the month of December, and it went up 0.2%. So good retail sales numbers exceeded the forecast. And now, if you take out autos, which are the big ticket items, which we kind of like looking at these numbers because the big ticket items can skew the numbers a little bit. We had a 0.1% growth in the month of November, and the forecast is supposed to be up to 0.4% for December, so go upwards. So people more going more online and shopping at brick and mortar stores, and it exceeded that again, 0.7%. So great retail sales numbers, great confidence level on the small businesses. And we got the import price index for the month of December. So we had a negative number back in November at 0.9%. The forecast was supposed to come down or improve up to 0.4%, and it came up zero. So it showed improvement, but not quite meet the forecast. This kind of shows the gauge as to where our U.S. global partners are located, wise that the trading is being done with them, and obviously not looking too great as we see the numbers from China as well as Europe. They're still lagging behind the U.S. in the economy. Last but not least, we got business inventories for the month of November. So October we had a 0.8% increase in business inventories. Forecast was supposed to simmer down a little bit to 0.3% and went up 0.4%. So exceeded that of the forecast. So again, decent numbers right there. But the high impact numbers for today would be the small business and the retail sales numbers. So as a result, you're going to see the stock market going upwards today. Stocks kind of rebounding a little bit after yesterday and taking a nice cue from the retail sales. So let's see how this is playing out in the bond market, where interest rates are at. As you can see, we had a nice rally yesterday with that long green candlestick going upwards, reaching the 100.63 where we finished up. Today we're actually down. We're down to about 100.28, so we gained a lot of the momentum we had yesterday. It can be kind of good for long term when you look at it. We had a couple real long ones, and when you grow too fast, too rapidly, it just means that much more rapidly you can come down. So a nice steady increase of the bond market would probably be a little bit more healthy for us long term wise. But right now we're starting to develop a upward trend, and if we can maintain this level and not obviously go down, but maintain where we're right about where we're at or a little bit higher, we can see that long term growth continue, that trend upwards, which will help in interest rates. But today, interest rates kind of worsened today as a result of today's numbers, with the money going from bonds over to the stock market. Now, with this next run here, I would kind of project kind of reaching maybe the mid 101 level here, maybe in the 101.30 to 101.50 range. I could kind of see that maybe happening up there. That might top out, and then maybe we might have another sideways or downward movement depending on what numbers come out. But for this next one, I would project some improvement. We hadn't seen those numbers since really about October of last year. So, but it will give us a little bit better position as to where things are at. All right, folks. Thanks for watching. I hope you guys have a wonderful day. Again, the rest of this week, we'll have pretty high impact news. So stay tuned. We'll look forward to seeing you tomorrow.